All right, welcome to this series of Master Mentor interviews. Where today, right, we have someone that I've been wanting to get on for quite a long time, Mr. Pete Tan. So, quick fact, right? So actually, Pete was the first trainer that I had, right, when it comes to investing, right, besides Rash, and Pete was the one that taught me about value investing, right, from that was like quite a couple of years ago. I don't know if you remember, Pete. But hey, so Pete, can you just introduce yourself a bit for my audience here to find out a bit more about you?
Okay, hi everyone. This is Pete here. So a little bit of background. I actually started investing in the worst time possible, which was around 2008 going to 2009 when the market crazily crashed over 60%. And yeah, I lost quite a bit of money back then. Then that's where I learned my lessons. And since then, I've been studying all the successful investors that I can find, reading about them, understanding how they invest, and yeah. So back in 2017, finally, I was able to make the move to quit my job in the military. Right, previously I was in the military in the Air Force, and yeah, and now I can pursue what I'm most passionate about, which is research in investing, being a full-time investor. Yeah.
Yeah, like now, like as in I'm in your community, your mastermind, everything that you do really damn good, damn deep research, right? So how have your experience been like since 2008, right? Since then
Yeah.
starting investing, right? I bet it was a scary time, but I bet like after that you also have evolved and grown as an investor, right? Could you share a bit more about your journey during that period of time as well?
Um, I think the key thing for me is that gradually I realized what is the type of investing that I am able to execute more sustainably, right? So initially I tried a lot of trading, short-term trading, and try to do more speculative trade. And I realized, while I see some other people doing it successfully, right, but I simply can't do it. It's just not something that was profitable for me. And 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 subsequently, I realized that actually the way that I perform the best is actually looking at value investing, something more long term. But my specialty is really into deep research, understanding the company, right? So rather than trying to guess what the price will do tomorrow, I am looking at the company and asking myself, right, will this company be the one in maybe 4, 5 years, 6 years to come? Yes.
Yeah, so personally, right, I also invest in that way. Right? I like to invest in things that I can sleep very soundly at night, right? Which is definitely what you are doing right now, right?
Yeah,
So
yeah.
yeah, can I just share from your experience, right? When it comes to new investors, right, they try to come in, they try to, whether is it trading or investing, right? What do you think over your years, right? Some of the biggest mistakes that you see that they do, right, in terms of whether they are looking to actively trade or whether they're just looking to do investing in stocks. Right? What do you think are some of the biggest mistakes that most of the investors tend to do?
Okay, I think number one, the most common mistake is for the investors, right? Is whereby uh they basically try everything, but they try with a lot of money, right?
Ah,
Like they don't take small steps to figure out like whether this is the style that they want, you see, or the style that they can execute successfully. They just dive straight into it. You know, when someone goes for a trading course, learn for about trading, and then they just 100K, 200K, and then when they get burned, what happens is that they will never come back to the market, even though they have not tried other ways of investing. You know, for example, growth investing or value investing, which might suit them, but just because they started with something that makes them lose money, right? They lost hope. They lost faith in this whole investing journey totally. So I think that's one of the key first mistake lah. Then the second mistake is that after they found what they want, some of them have this shiny object syndrome. You know, like quite SOS, right? Where they know that this strategy works, right? It has been proven time and time again through decades of investing, right? It works. But when they see some shiny object, right? Somebody tell you, "Oh, I make 200% in a few months, in a few weeks," then they're like, "Oh," then they go and try that thing again. Yeah, then they whack, then they lose money. But the thing is, when they lose money there, right? They wrongly associate that with what they have learned before, and that works. All right. So to me, I think understanding what works in the market by reading a lot and then trying out in small bits, then deciding very quickly which one suits you, right, is the one of the most important thing. And then once you decided that track is for you, you should stick on that track unless there's very strong evidence or there's very strong reason for you to deviate, right? Don't FOMO, don't have that shiny object syndrome and then go and detract yourself lah. That is often very costly, very very costly for beginners.
Yeah, so I think the two things that you said, I think firstly is really like, first when people try out, they like to go all in, right?
Yeah, they don't like dip their toes and see what's the temperature of the water. No, they just jump straight in. Then it's either too cold or too hot. Then they don't want to go back already.
Okay,
Yeah.
right. And then the second thing is that they start chasing after the next hot thing, right? The next
Yes. 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 Yes.
shiny thing. It's very common, right now. Like I see it myself as well.
Yeah.
Like
Like
a
super.
lot of new strategies all coming up and everything, right? Which can be pretty dangerous, right? And then I think one thing you mentioned, right, the FOMO-ness comes very easily, right, among new investors, and that's a huge
Yes.
thing that people
Yes.
can remake, right? Okay, so,
Yeah.
so thanks for sharing that, right? And then next, right, Pete, like one thing that I always like to ask my guests is that, hey, like right now, how long have you been speaking and teaching already, right? Currently, like how many years?
I think started about, I mean, properly teaching about just when I left the service, so about 3 years ago. But really investing and sharing my knowledge is really since,
A
I don't know,
long,
2011,
a long
2010.
time.
Around there. Yeah, it's a long time. It's a long time. That tells you how old I am. Yeah.
Right. So, like, out of like roughly how many students have you taught so far already? Like, so far you have shared with, you have spoken to.
I I don't really know. I don't
Yeah,
keep track, but I would say definitely more than a few thousand. Definitely
more a
more than
few,
a few thousand.
more a few
Maybe
thousand.
2,000, maybe 2,000. I don't know. I really don't know the real number because
Yeah.
I don't keep track on how many students.
But you've
Yeah.
been to like Japan and Singapore for
Yeah,
sure.
Japan, Taiwan, Thailand, Australia a bit. Yeah, and Singapore, of course, Malaysia, of course.
Yeah.
Yeah, but of course, most of our students is still Singapore and Taiwan and Japan. These three main countries. Yeah.
Okay, sure. So I think when it comes to and so given someone with some like a lot of experience, right, worldwide everything, right? So what do you think are the? I'm sure you know, right, that there are always some students that actually achieve way better, way faster results, right, and
Yeah.
manage to achieve the like their goals beyond their wildest dreams, right, compared to some that might still be stuck at a space where they do not want to be, or they might not have gotten the results as fast or as great as they want. So in your opinion, right, Pete, like what do you think are some of the difference in characteristics between group one and group two, right? And how do you think more people can make sure, right, that it can be group one where they actually achieve the results they want in a much faster, in a much better manner?
Yeah, one of the key thing I observe between students who succeed and those who don't succeed is that the one that succeed really focus on what they do, right? I think it's back to the previous point about really being focused and not having that shiny object syndrome and chasing the next thing, you see. If you understand what works, right, just focus on that until you succeed, lah, right? I mean, there's this saying, right? Focus stands for focus one course until succeed.
Yeah,
That's the acronym, lah. They say focus, that's the acronym. So
yeah,
I think that's one of the key trait, to really have that focus, and that focus also requires I think a lot of discipline. I think most investors understand the logic. For example, right, buy low, sell high, right? That's the most common thing, right? And
yeah.
recently we have seen the market come down to the low,
Mm,
but most people would not have bought at that point in time,
mm,
right? We just did a poll in our own community of students, right, where
yeah,
we ask people like, hey, how many of y'all bought some shares of those great companies during the market crash, which happened about 2 weeks ago, lah.
yeah,
My own belief is the market crash is already over, right? So
yeah,
when we ask them that, very few people said they bought shares, and it's because they were paralyzed by that market crash,
mm,
right? It's also a form of FOMO, right? It's not the fear of missing out, but the fear of catching the falling knife.
yeah,
But we know that the market is on offer. So while everybody understand intellectually that you should go in and buy when it's cheap and then sell when everyone is talking about shares and everything is very high, but
yeah,
it's emotionally very hard to execute
mm,
uh, as an investor, right?
yeah,
To go in and buy when everyone is running out of the market. It is very counterintuitive.
yeah,
That's why being in the community is very important. And I would say, unfortunately, even when you are in the community, in my case, when we kept on telling students that, hey, now might be a great opportunity to go in and have a look, but students are still reluctant to jump back in because,
yeah,
because of that lack of focus and discipline, right? When you know something that is cheap, you know that the theory is go in and buy is cheap when it's cheap, but when you see the price come down, you have this fear of, wow, what if I buy already continue to drop?
mm, mm,
Whereas the more important question is, if I bought it at this price and it continues to drop, I should be buying more. And
mm,
if I have no more cash to buy at this point in time, then look at the overall market, is that the market will always recover,
yeah,
right? So so I think one of the key thing for people is that understanding what works, focus on what works, and then have the discipline to carry it out. Yeah. So I guess these are the two traits I always see in investors. And I think the funny thing is that usually the more unsophisticated investors, meaning the one that don't think so much on, right? I tend to see more results from them because they are just by the book, right?
Okay, let's go.
Yeah, let's go. Like when I tell them that, okay, Google less than, okay, maybe it's not investment advice, but when I tell them, hey, when Google dropped to like 1,100, okay, it's good price, like fantastic, I will buy myself. Then they will be like, you're just going to buy it. Whereas those who are like intellectually very advanced on, they'll be like, hey, but what if this, what if that, what if Google don't come back and things like that. Overthink it, like, then they don't take action. So they're not focused. They keep thinking about like what else. Whereas the honest truth is when things are cheap, just go and buy. It's very simple.
Yeah, so as in what I'm hearing, right, is that there's a lot of people that as in it's really to succeed, right? At least from the investor's point of view, or what we generally do, right, which is that hey, when the opportunity comes, right, don't think simple, just take action, right, and just purchase it, right? And your strategy and your game plan has to be like, okay, if it goes down further, then my job is just to buy more, right? So
buy more.
On the other hand, people tend to overcomplicate things and they have FOMO, their emotions, right? So at least in your opinion, right, what will you tell like a student if they are still thinking of like, I'm still very fearful or I'm still thinking so complicated? Like, how do you think that they can, besides being a mastermind, like you said, right, what are some tips you feel that they could use they could apply to actually overcome these sort of issues, right? Because I think this is something that's going to be very important, not just for new investors, right, for experienced guys as well, right? So any tips you have for this group of people?
I mean, if we don't talk about using derivative like options, let's just talk about stocks, right? Actually, there's a very straightforward way, right? You just put what we call a limit order in your brokerage account, and you set it forever, right? So, I mean, back to the Google example, right? What happened to me was long time ago, I thought Google would be considered really cheap at $1,100. So, I set a order to buy Google at $1,100, and it was a limit order, right? And it's supposed to last forever. We call it GTC, good till cancelled. So I actually never touch it, and I kind of forgot about it when the whole market come crashing down, and then it just hit that 1,100, and actually it went below that. It went to like 1,050. Right? So I bought it at 1,100, and that's it. It is emotionless. It is doesn't require me to do anything because the system already coded in. So one way I would say is to really automate your investment if you can. Right? If you're just a simple stock investor, which nothing wrong, right? You can just simply automate the process, definitely. And another thing I would encourage a lot of people to do is that these days there are actually quite a lot of I would say solid investors who are actually very prolific on YouTube, on Facebook, right? Including myself. We are a bit shameless, but we keep on trying to shape the correct mindset to people about investing. So I would say one thing is find people who you believe are solid and just listen to what they say to get some confidence. Because a lot of times when you invest on your own, right, you'll be like, oh shit, sorry, I cannot say the word, but should I invest now? Should I buy now or buy later? And if you listen to the correct people, you get a bit more confident, right? They will tell you like, I also feel that the market is cheap, for example, or they will tell you that, oh, I feel the market is very expensive now. So in that way, you can kind of check your emotions, right? Either through automation or you listen to people that you can truly rely on. But I would say the second part might be a bit harder because you don't know who to distinguish. Right? You don't know who are the fraudster and who are the real ones. But the first one, the automation, surely there's no emotion involved.
So once you really
so these are the quick tips.
I think what you said, like once you have a game plan, you set it in place, you set up automated rules, right? So Google, I think it was a bit earlier, last year, right? We were talking about Google. I remember you're talking about it as well. I know some people are afraid of everything, right? But I think that's a damn powerful rule, right? Which is just to automate it, right? And then secondly, what you said about following the right people. But then again, people you follow, like do make sure they have a good track record, right? What they say isn't just based on pure opinion, right? It's actually based on actual facts, right? I think that's very important.
So, but I guess one good tip is that if you know that someone is good, so let's say someone follows you, right, as Marc, as the master mentor, and they know that what you stand for, what you think about, right? Then one hack people can do is to just check out who you follow.
Ah.
right? Because you would have filtered for them really,
Yeah. Yeah. Yeah.
right? So for example, I can just go to your Facebook or
Yeah.
your YouTube channel and I find out who you follow or
Yeah.
which post, whose post you share, for
Yeah.
example. And yeah, and that's where I get a lot of ideas as well, where I follow people who I like and I check out who they follow as well.
Yeah, I think that's damn smart. That's a good hack. Because like
Yeah.
on Twitter, right? On Twitter, I realized that there are actually a very active investor group over there as
Yes.
well, right? So I realized that people actually they always like recommend, hey, this is who I follow and everything. So I guess you
Yeah,
can use
yeah, yeah,
Facebook
yeah.
and emails as well, right? I think
Yeah,
that's
in the FinTwit community is very, very active. Yes, yes.
yeah, that's a very good hack. Thanks for sharing that. Right. So right. So next, right? So can I just challenge you a bit, right, Pete? Like, so
Yeah,
that's more for stocks investing, right? So how
yeah.
about for people like I know you do, I know we do a bit of options investing, right? Then
Mm.
about options investing, what do you think like are some of the bigger mistakes, or do you think it's just a much more volatile version of stocks, right? In terms of trading and everything, right? Like when it comes to options investing, what are some of the things that students should really like take note of when getting started market, especially right now during this period, the COVID crisis period, things are a bit more
Mm.
volatile. There's a lot more news, right? What are some of the tips you feel that students should really take note of right now?
Yeah. I think for options, most students forgot the main uh, difference between a stock and an option, right? Is that the option has a time span,
Mm, mm,
right? It has a lifespan. There are lifespan to it. Once the option expires, that's it. Whatever amount of investment you throw into it disappears,
yeah.
right? So a lot of people wrongly uh, implement a strategy on
Mm,
the options that is meant for a stock.
ah, mm,
Right? Say for example, if let's back to Google example, let's say I wanted to buy a stock,
mm,
and my perspective is I have a long-term perspective. I don't know when Google will recover. In fact, right now Google is still at a low level compared to its last high, right?
yeah.
So they say, hey, I buy the stock. I'm a long-term investor. I'm going to keep for 4 or 5 years.
Mm,
But the same people, right? If they use options and when they look at the option prices, because there's so many different prices, they might just choose the cheaper option prices
mm,
to buy the option,
yeah.
right? And when you buy a cheaper option, what happens is your time is very little. You might buy a one month option, 2 month
Yeah.
option.
Yeah.
Then you will tell yourself, oh, my perspective is that Google will go up. But
Yeah.
these are two different things, right? One is a 5 year span and one is a 1-2 month span.
Yeah.
So the key thing is option is actually not a bad thing, right? It's just a tool.
Mm,
I also use options to generate more profit, but most beginners, the mistake is that they wrongly assume what they do in stocks can be directly applied in options. It's a bit different,
mm,
right?
mm,
So I would say for most people, if you don't understand options, once again, don't FOMO, don't have the shiny object syndrome.
yeah.
Don't just do it because someone else is doing it,
Mm,
right? Don't just because I'm doing it or you are doing it and then you go ahead and do it.
yeah.
Go and learn about it, find out what are the pros and cons about options
Mm,
and how to execute it successfully,
mm,
right? And once again, dip your toes lah, right? Spend a few $100 or maybe $1,000 just to try it out,
yeah.
right? See whether you can do it or not. If you cannot do it, then good, you can always revert back to stock,
Stocks, which in the
right?
long run, you know that you will go up, right?
Yeah. I mean, of course, options, if you know how to do it, potentially you can be more profitable. But if you don't know how to do it, is it okay? Or not? Is it okay to just remain in the stock market? Of course, it's still okay to just do shares,
Mm,
So don't force yourself to say, wow, everybody is doing it, then
yeah.
I want to do it. I see somebody make 300% return one night, I want to do it as well.
Mm,
Right? So yeah, don't chase that lah. So if they want to do options, I suggest the best thing to do is to really learn properly and find out how to do it. And if they choose to go down the track of options, just remember whatever trade they do must match their expectation. A lot of people have the long term thinking, but their
mm,
options trades are very short term, which kills them.
mm.
Yeah.
Yeah, I think that's very important because a lot of people, when they do with options, right? Like I think what I said, like they forget there's the whole time decay, there's a whole time
Yeah, that's
expiration.
correct. Yeah.
Yeah, so I think that's a very good reminder for a lot of people. Because yes, I'm sure you know that there are a lot of people right now that are trying to jump into options investing without having a good understanding of what is it,
Yeah.
right? And really educating themselves is
Correct.
very, very important. Okay, so now, Pete, so that's so my next part of the interview is just really, of course, finding out right now, in your opinion, what's going to happen to the market right now. So today is 20th April, right? So what do you think is happening in the market? I think future, as of this interview right now, futures are down and everything. So what do you think is going to happen to the market in the next few months' time? And your general thoughts on the market right now?
Yeah, I mean, before I comment, I think generally I don't really look at the market that much. But if you were to ask me about the market movement, I feel that the bear market is kind of over. It is quite obvious. I think potentially we just need a few more weeks to have the price to confirm for us, right? That the bear market is over. But I think right now, pretty strong evidence that it is at least over for the time being. And I think the whole COVID-19 situation, the government and most people are already kind of accepting it, accepting it already. So that's the cool thing. And I think people, once again, when they invest, don't be too obsessed about where the market is going. But once again, ask yourself, right? Are you an investor or are you a trader? Then you make a decision from there, right? So for me, I'm more like an 80% investor sort, right? So for me, I look at individual businesses and I just find out the value of the businesses and just go ahead and invest. The direction of the market may help you to get a better price, but in the grander scheme of things, it really doesn't matter, right? You just look at the charts. Even if you bought it at the highest point in 2009, right before it crashed, you're the stupidest dumb person ever, right? You still like tripled your money by today, 300% in 10 years, nothing to shout about, but it's still not bad. Right? It's still not bad.
With the worst
timing,
right?
Yeah. So even if you time it the worst, you will still end up correct when you have a long-term perspective. So that's what I looked at in terms of the market. I do think is a bull market, at least for the near foreseeable future. But I think really no one knows. Yeah. And with the amount of money that the Federal Reserve is pumping into the market, I think the evidence points to them succeeding most of the time. Right? You look at the 2008 crash, they literally saved the whole market by doing a lot of QE.
Yeah.
Right? And to put it into perspective, right now, in 2008 onwards, they did 3 rounds of QE. Right? Each of the QE is in the range of like $500 to $700 billion.
Yeah.
And they only did 3 times. Right? And right now they are doing that same amount, approximately that same amount every week.
Yeah.
So my take is that it really doesn't matter. I think when so much money is in the system, the money has to go somewhere. And I think a good portion of that money will flow into the stock market. And that's why I think it is still a good time to invest in the stock market for the long run, because asset prices will, I would not say 100% go up, but I'm fairly confident now with the amount of printing that they do or pumping of money in the market, it will drive up asset prices for sure.
Yeah. Because there's so much vested interest, right? Whether it's by Trump, the Fed, and whoever, right? There's just so much vested interest in making sure that the stock market stays up, right? And that's why there's a lot of printing of the money of the market, right? But so I think a lot of people have been asking me, right? So I would love to get your opinion, right? So wouldn't that mean, right, if all this printing, that eventually, right, wouldn't that devalue the US currency? And don't, like, I think we have also discussed this a little, like, eventually, don't you think that it's like all this printing has to stop one day and the US market could drop and whatever right now? So what are your thoughts on that, right? Like right now, of course, the market is down and it's positive, but don't you think that this one eventually will lead to like a drawdown of the market or huge devaluation of the currency?
Yeah. So I think most people need to differentiate between what they think is the right thing to do and what has been working.
Okay.
Right. Yeah. So of course, if you ask me, living within your means as a government, like how Singapore does it, we have a lot of reserve, is the correct thing to do, right? It's like on a personal level, you should always live within your means. You should not take on too much debt and then you have difficulty paying. But when you are a government, especially in the United States, where you can print your own money, that logic may not matter anymore, right? So once again, I'm not saying it's the correct thing to do. This whole QE printing like crazy is not the correct thing to do, but it's something that has been proven to work. We literally printed our way out of the last recession, and we had a 11-year bull run, right? So for the country's sake, for the people's sake, right, to not go into a full-on depression, right? The government will do whatever it takes, right? The US government already said that. So I think they're just following the book, the rule book, whereby, okay, in '09 we did this, it worked, so why not we do it every week now?
Yeah. Yeah.
And I think there's a large chance that they will succeed again, because you just think about it. They are the one that prints the money. They are the ones that's accumulating the debt. So there's no margin call on themselves. You know what I mean?
Yeah.
Right? When you're over leveraged as an individual, you're scared that the bank will call on you. Right? But when you're the government and you're printing money, paying yourself, and you're paying your own debt to yourself, you get that logic? Like, who can call you, say that, hey, you must pay up all your debt now? Nothing. Right? It doesn't matter. And of course, people worry about devaluation of currency, right? My view is that in the short run, US currency will still remain quite strong, simply because they are the reserve currency, right? The whole, I mean, think about it. Currency is like anything, right? When the demand is high, the prices go up. When the supply is high, the price goes down.
Yeah.
Right? So think about it. In the world, this is the reserve currency. Everybody demands US dollar. Right? Most of your debt is held in US dollar.
Yeah.
So when the corporates or the governments in other countries need to pay off the debt, they will also pay off in US dollar.
Yeah. Yeah.
So I think the demand for US dollar is still super high. Yeah. So in fact, with a lot of countries now taking on more debt, I think the demand for US dollar will be even higher, right? Because there's more interest to pay in the future.
Yeah.
Right. So that's my short-term thesis. But I think long-term, if they print enough, will that overcome the whole reserve currency?
Yeah.
Yes, it might. It might. So I think one of the best things people can do now is to really ask yourself, right, the cash that you hold, can you meaningfully invest them in assets whereby they will grow with the currency, with inflation? Right? And inflation generally is good for businesses, because businesses can charge more. Right? For example, like Apple, right? Apple can sell this phone for $1,000 right now, but if there's inflation in the future, they can charge 1,400, right? And that profit will reflect in your in your company balance sheet, right? In your income statement, and that drives share prices as well. So I think the best way to overcome a very long-term inflation problem, right, is really to invest in productive assets, right? Like businesses, maybe properties, things like that. And for those of us who are a bit old school, right, I've been talking about, hey, if you're worried about your money being held in currency, you can hold it in the God's money, which is gold.
Gold, yeah.
Right? You can hold it in gold, right? Gold prices has been proven to hold its value relatively well. There is some fluctuation, but relatively well. Then you are totally out of this US dollar problem, right?
Just relying on them, right? But right now, your thing is that as long as people still do trust in the whole USD currency, people still trade in that, but the demand will continue to go up, and the chances of it devaluing significantly is going to be very low, right? So I guess that's your general thesis.
I don't think the US dollar will devalue, but I do believe that amount of money pumping to the market, it will cause inflation.
Inflation, okay.
Inflation across the board, but not that the currency devalues.
Okay, so I think thanks for sharing. I think a lot of people will be definitely very interested to know about this part, right? Because I think people are worried, like, hey, printing so much, does it just mean that US is going to be worth less and everything, right? So I guess then the next question, right, I think will be a bit interesting, which is your thoughts on China right now, right? So with whole China, I think the other economies are going down and everything, but China is like coming up. And what do you think about the whole China situation right now? Do you think I think the general thesis is that yes, they'll be the next superpower, but do you think they're going to like rival or be on par with US in anytime soon?
I think definitely they will be at least on par with US in the future. They will create, I feel that it will create this duopoly between the Chinese economy and the US economy, and both will want to compete with each other in a certain way, but the fact that two of them exist as a duopoly allows them to kind of monopolize the whole trade, right? And they will kind of help each other, right? Because one sells and one buys and so on and so forth. So I think if eventually it's not about China or US kind of situation. I do see as a China and US both thriving, and China especially so because they are coming from such a low base. Right. But the thing is, we cannot expect China economy to continue to grow at this pace. Right. It will come a time where once they are big enough, like the United States, it will slow down. Right. So that's when a lot of people might get disappointed, because they think that China will continue to grow at like 8%, and this year they had the first GDP slowdown ever. Like ever is a damn long time, Okay,
Game
so
law
I don't
years, right? Quarters, right?
yeah,
Yeah.
like crazy. So I don't think it will be a US or China. It will be both, and I think both will remain as a superpower simply because US is a free economy. A lot of innovation will come out from there, whereas China will be the production house of the world, basically. Right? Look at how much product comes from China, and recently with coronavirus, we then realized how important China is in the whole supply chain network. Right?
Production.
People are literally saying, "Oh, we." Apple was saying that they ran out of phone to sell, right? Because China stopped the production line. So in a way, I think both economy will be equally strong. So I'm quite bullish on both countries in a general sense, lah. Yeah.
Okay. Hey, thanks for sharing that. Right? So I think all these insights would be definitely useful, right? For especially for a lot of investors who are still new, starting out, right? So if I could just end off with one last question, right? Right now in your take, right? So I do know that right now you manage a large portfolio, right? Your family fund and everything. But if for someone to start out right now, right? Let's say they're starting with just 3 to 5K USD, right? How would you generally try to, in your opinion? I mean, of course, there's subjective and there are different opinions, right? Right now, if you had to start off over again with like 3 to 5K portfolio, what would be some of your action steps in the first 30 days, right, to actually jumpstart and to grow a portfolio right now in this period?
I think the first 30 days is really a lot of reading, a lot of watching videos of interviews of people and trying to figure out what is the investment style that you resonate with the most. Right? Are you a trader at heart, or are you an investor at heart? Is it value investing, or is it more of technical trading? And to really get that very fast and then take action on that, right? And it doesn't matter if you're a small portfolio or not, your portfolio will eventually grow. And the key thing is, a lot of people say that, oh, I have a small portfolio, but they forgot that they are probably still in employment, right? They will have income and more. You will add on to it, right? So I guess my advice to newcomers is that don't be discouraged when your portfolio is small, right? The key thing is think about how to supercharge your portfolio by not just investing well, but also how to save up properly and then add it in. Right? Because if you rely on your $3,000 to grow on its own, it's going to be very, very tough. Right? Think about it. $3,000, if let's say I give you a spectacular growth, 300% that year, your $3,000 is going to become 9,000. Okay, so be like,
not going to change your life.
Okay, yeah, it's not going to change the world, But what if you keep on throwing your income source into it? Every month you add in like 500, right? That will really compound your returns over the long run. Yeah, definitely.
Okay. All right. Hey, thanks, Pete. So thanks for a wonderful interview. I think we learned a lot of useful insights and everything. But right now, if my audience want to find out a bit more about you, like how can they check you out?
I think the best way to check me out is I have a podcast. It's called All Your Decisions, where I did with another guy called CK. And the main way to follow me is on Facebook, right? Just look for Pete Tan on Facebook. I'm always sharing my thoughts and the way I invest and and everything that I'm passionate about.
All right. So I'll definitely put a link in the comments, right? If not, then thank you so much for a wonderful interview, Pete, and look forward to seeing the market and your analysis as well. All right.
All right.
Okay.
Great to be
Bye.
here. Thank you very much. Bye.